Opendoor had another tough session today, and this time the pain carried into the aftermarket. The stock dropped an additional 52 cents after hours, extending what has now been 3 consecutive red days. When you look at it on the screen, it doesn't feel good. Momentum that once looked unstoppable now seems to be sliding downhill. For many investors, especially those newer to the story, it's easy to panic in moments like this. And I'll be honest, aftermarket moves can look scary. But here's the truth. The aftermarket doesn't always tell us where the stock will head tomorrow. What it does tell us is that right now, confidence is fragile, and the market is looking for clarity, leadership, and catalysts to hang on to. In this video, I want to do 2 things. First, I want to acknowledge the frustration and the reality of what we've just seen. And second, I want to lay out the bigger picture, the reasons why long-term investors need to stay grounded, and the catalysts that are coming which could reset the story in a more meaningful way. Because while momentum has clearly broken for the moment, the fundamental reset that's been underway at Opendoor has not changed. If anything, the recent turbulence shows just how much the company needs fresh catalysts to keep the conviction alive. Let's start with what happened today. The aftermarket drop, on top of 3 red days in a row, looks like a combination of panic selling and downward momentum feeding on itself. Retail conviction was already rattled after Eric Jackson, who has been the loudest voice in the open army, started spotlighting another stock, BETR. That shift of attention weakened the unified resolve of the retail crowd. Shorts, who have been waiting for an opening, took advantage of the wobble and pressed their positions. And then layer onto that the uncertainty swirling around the company's cultural reset, the return-to-office mandate announced by Kaz, speculation around staff cuts, and the general unease of a business that is moving very fast to reinvent itself. Put all that together and you get a setup where sentiment cracks and momentum unwinds. But here's where we need to step back. Stock prices move on fear and greed in the short term, but in the long term, they move on execution and results. And the execution story at Opendoor is still very much alive. Let's go through the big pieces of it. First, leadership. The overhaul at the top is not cosmetic. Kaz Nejatian stepping in as CEO, Keith Rabois taking the chairman role, and Eric Wu returning to the board means the founder's DNA is back in the company. Kaz has wasted no time showing he's serious. He's cut ties with external PR firms, choosing to speak directly to investors and customers through X. He's accelerated the national rollout that was supposed to take weeks, instead launching it immediately. He's been candid about pricing models being revamped. These are not small tweaks. They are wholesale changes to the way Opendoor runs. And the speed at which they're happening tells you something about the culture that's being built, fast, decisive, and unapologetically focused on execution. Second, the macro backdrop. Just last week we saw the Fed cut rates for the first time this year, with signals that as many as 3 cuts could be coming. That's important for Opendoor because housing is one of the most rate-sensitive sectors in the economy. Every tick lower in mortgage rates makes it easier for buyers to re-enter the market and easier for sellers to transact. Opendoor doesn't control interest rates, but it benefits enormously when borrowing costs come down. That's a tailwind that could become more meaningful as the year unfolds, especially if we get more cuts heading into the fourth quarter. Third, expansion. The national rollout is a game changer. For years, critics said Opendoor was too slow, too limited, too cautious. Under Kaz, that's changed overnight. The company is no longer creeping into new markets, it's sprinting. By being present in all lower 48 states, Opendoor positions itself as a true national platform, not a niche experiment. That scale matters, because the more homes they buy and sell, the more data they collect, and the more accurate their pricing models become. Scale feeds intelligence, intelligence feeds efficiency, and efficiency feeds profitability. That flywheel is what Opendoor is chasing, and the national rollout is the foundation for it. Fourth, the cultural reset. Kaz has announced that starting September 29th, Opendoor will be an in-office company. Work from home is over. That's disruptive, but it's intentional. Keith Rabois has been vocal about the company being bloated, suggesting that of the 1,400 employees, only 200 are truly necessary. Those comments may sound harsh, but they reflect a philosophy: lean, efficient, high-output organizations beat bloated, bureaucratic ones every time. We should expect workforce reductions, and while they may hurt in the short term, they're exactly the kind of painful but necessary steps that can make Opendoor stronger in the long run. Less overhead, faster decisions, clearer accountability. Interestingly, while some are leaving, Kaz has also been actively recruiting online for new developers and engineers. That tells you the focus isn't just on cutting costs, it's on building the right team for the future. Efficiency isn't about doing less, it's about doing the right things with the right people. The return to office mandate, the likely headcount cuts, and the targeted recruitment are all part of reshaping Opendoor into a leaner, more focused software company. And that brings us to the fifth point, the vision. Kaz has said bluntly that Opendoor is not a house-flipping business. It's a software company whose mission is to tilt the balance toward owners rather than renters. That's a powerful framing. It changes how you think about the company. Instead of a transactional player trying to make a margin on individual deals, you start to see it as a platform, one that begins with buying and selling homes, but then layers on adjacent services. Financing, renovations, insurance, tax, maybe even the much-talked-about return your home if you don't like it product. This is the Shopify playbook applied to real estate. Do the core things so well that customers trust you, then expand into services they didn't even know they needed. That's how you build loyalty. That's how you build margins. And that's how you build an enduring company. Now let's talk about insider confidence. Co-founder Eric Wu recently bought almost $3 million worth of stock at around $6.65 a share. That's not pocket change. That's a serious vote of confidence from someone who knows the business better than almost anyone. Insiders don't buy unless they believe the stock is undervalued and the long-term trajectory is positive. That buy should not be overlooked, because it tells you that at least some of the people closest to the action believe the reset is real and that the payoff is worth waiting for. There's also the retail side of the story, which we can't ignore. The Open Army has been a huge part of Opendoor's rise this year. And while some worry that Eric Jackson talking up another stock means conviction is weakening, I think we need to put that in perspective. Retail energy is powerful, but it doesn't have to be singular. Yes, attention may spread to other plays, but the core belief in Opendoor hasn't disappeared. In fact, Kaz himself has leaned into the retail narrative, joking that Drake can be the manager of a future Canada office if he wants. That kind of engagement shows he understands the value of retail momentum, but it also shows he knows how to keep it light and human. The bigger picture, though, is that the story is shifting from retail hype to company execution. That's exactly what long-term investors should want. Retail can fuel momentum, but execution sustains it. So what are the catalysts that can restore confidence and rebuild momentum? Rate cuts are one. If the Fed delivers 2 more cuts this year, the housing market backdrop will improve, and Opendoor will benefit. Company performance is another. Management has already signaled that activity may be lower over the next 2 quarters, but if results come in stronger than expected, especially in Q4, that will be a major boost. The strategic reset is also a catalyst in itself. Workforce reductions, the cultural shift to in-office operations, and the recruitment of new technical talent all show that Kaz is serious about building the company differently. And finally, new product announcements. If Opendoor rolls out buyer-first products like the home return option or starts to expand its suite of services, that will be another moment for the market to reevaluate the story. The bottom line is this: today's aftermarket drop is painful, but it doesn't change the fundamentals of what's happening inside Opendoor. The leadership team has been overhauled. The national rollout is complete. The Fed is easing. Insider buying signals confidence. And a cultural reset is underway to make the company leaner, faster, and more efficient. That's the real story. Not what happens in an aftermarket session, not where the retail attention wavers for a few days, and not where the shorts press their positions in the short term. The real story is whether Kaz and his team can execute on the reset, deliver better than expected performance, and build Opendoor into the software-driven housing platform it is aiming to become. For investors, the challenge is to stay calm in moments like this. Volatility is the price of admission for growth stories. Stocks rarely move in straight lines. They overshoot on the way up, and they overreact on the way down. What matters is not where the stock trades after hours, but where the company is headed over the next year, the next 3 years, and the next decade. If you believe in the mission, if you believe in the leadership, then today's drop is noise. The signal is still strong. So yes, Opendoor closed red. Yes, it slid another 52 cents after hours. But the foundation of the reset is still in place. The catalysts are still ahead. And the long-term vision is still intact. As investors, our job is not to panic when the crowd panics, but to see the bigger picture. And the bigger picture here is that Opendoor is not just surviving, it's resetting, it's expanding, and it's building for the future.